tweet is out. The tweet is out. I'm on the other Twitch. The tweet is out, boys. The other Twitch is going, just waiting for that notification to really get into it. There it is, ladies and gentlemen. Ladies and gentlemen. Welcome back to the stream. We'll be doing some finance today. Some finance, if you would. What are we doing today? If you didn't see the title of the stream, excuse me, we'll be going over Spotify. Their second quarter earnings were today, and we're going to go over them. Do a little model update for the model that we have here. Real quick though, I'm gonna go to Atom Finance, and if you guys didn't know, we have a hub that was in the YouTube description for the previous stream, up there, of all the stocks that we've done on stream, that we've talked about on stream. Spot right here. I'm gonna drop this link. I'm gonna drop it in the chat so you guys can enjoy it. If not, it's all good. Spotify today, a little bit of a rough day. Down 2% today. Is that move justified? We'll find out today. I did go ahead, guys, read their earnings transcript. I listened to the conference call. Pretty interesting. But we're going to get into, I haven't looked at the actual numbers, so that's what we're doing today on the stream. Guys, let me know if the music is too loud and all that stuff, and I will adjust accordingly. So, I guess without further ado, let's go and do it. We're going to have to update all this, of course. Going to start off with our MAU build, because we got it over here. Over here, it's like I prepped the stream. Alright. So, start off with, let's look at those total MAUs. 299. Pretty decent jump year over year. 29% growth. 5% growth quarter over quarter. Premium. And our ad supported. Do those real quick. Some of these metrics we're not going to be able to do right away because some of it's found later on in the filing, such as some of the revenue comes from quarterly statements, so on and so forth. But just starting off with the MAUs, pretty decent. I'm not even gonna lie. We'll update the charts at the end of all of this, but for right now, probably wave. I think ad supported was right in line with where I thought I was going to be for the end of the year, actually. Ad supported subs, yeah. 133 and they're at 170. I definitely need to update those. I think probably the same for premium. No premium. We're still waiting to get there, but definitely ad supported needs to get bumped up here. For sure. A lot more growth than anticipated. Going on though. That's quarterly revs. Maybe we should do, oh no, MAUs per region, there we go. And I only do the total MAUs, I don't do premiums. So Europe at 34%. North America at 26%. The rest of the world taking over, probably because of India. Because their launch over there in India, really helping them out. Always hard code those, that way we can go and derive user growth this way. Same over here. Okay, gives us a little bit better breakdown. Why is that churn? Oh, no, that's. Ignore that. This is quarter-over-quarter growth and year-over-year growth. I was like, why is that churn? It's not. So decent growth over there in the developed markets, and even better growth in the rest of the world. Talking 55% growth year-over-year. It's huge. It's huge growth. And of course, they got the Joe Rogan Experience here as a part of. They made that acquisition, so that should be very interesting to go and see how that feeds in. Let's go and just do our quarterly statements real quick. That way we can finish the rest of that stuff up pretty easily. How's everyone doing out there? Hopefully you guys are doing well. Alright, oh, that's right. Spotify's changed their statement so many times that I need to go into each of the little things, the little breakdown segments here, to really figure out what their earnings are, what their revenue is for each of them. So premium, and then come on, ad supported, where you at? Ad supported. Now we'll go back down to our regular quarterly filings. Just gonna grab the formatting there. COGS, gross margin staying about the same. We'll add those in later because that's on the MAU tab. Now I'll go and look to see what some of those operating profits, what that operating margin did. Oops. Yeah, that was a big jump in R&D. I have to imagine that's some of their SAI, their Spotify advertising agency. They've been putting a lot of money into it because that's one of their kind of in-house advertising agency for podcasts and all that stuff. So that was one of the things that they noted on the call. Because now they have all that new content coming in on the podcast side, they definitely need to go and have some better investment tools. That networks out right? No, that does not. Because I was off by a number. There we go. Income tax expense. Positive, right? So income tax benefit. And fully diluted shares. Yeah. Balance sheet. This is kind of where I really try and pay attention to. Oh, that's right. Spotify does that weird thing where it's their long-term assets are first, short-term assets are not. This is where I really try and pay attention to some of the things like how have liabilities shifted? Do they take on more debt? Cash equivalents, did that increase, decrease? What kind of is the mix shift within the balance sheet that would catch my eye? So far, nothing too big. Looks pretty much like normal. That side will be very interesting to go and see. Oh, this is a good song. It's one of the ones I always remember from this playlist. Yeah. Big jump in preferred libs. Damn, they've kept their depths pretty low, which is good to see. Treasury shares about the same, so no big increases. Their other reserves really ticked up. I've stopped doing quarterly cash flow statements just because they become a big pain in the ass to track all the differences quarter to quarter. I much rather take the approach of get all of the net changes more than anything else. Cash flow from investing. And 207 gives us our change of I must have missed a negative there at some point in time. Oh, forgot the Forex. That wasn't it. I just looked the wrong line item. And that increase decrease was 207. With that positive free cash flow, very low free cash flow margin, but hey, I'll take positive free cash flow for a quarter, especially with COVID happening. Alright, so we got all of our core quarterly statements done. We got the income statement done, we got the cash flow statement, balance sheet, all done. And also these will help because when we go back to our MAU tab, we can fill in some of these metrics. Like some of our calculated ARPUs, some of our ad-supported revenues. Go back up to gross margin side over here. Find out premium was 2.81%. Premium subs, that goes down. ARPU. Which you give out over here on revenue. Premium user ARPU, slightly down, quarter over quarter. But still decently high. I always calc out the ad-supported ARPU just to go and see what it is. Just for my own sake, not for Spotify does not disclose that. However, ad-supported gross margins down pretty significantly. But that's also because they lump in the cost of podcast into the ad-supported revenue line. And they started doing that in Q1. That's why we saw it go from about pretty steady gross margins to a kind of decline down, was as they ramp up the spending on podcast. You'll see that kind of margin shift go on. Go and do ARPU again over here. This is all calculated. This isn't necessarily disclosed. Churn is also disclosed, but kind of weird way. It's buried in here. And actually the premium subscribers metrics. There we go. Churn improved approximately 46 bips year over year, but ticked up approximately 8 bips sequentially. So that would be 3.8% year over year. So we'll just make this equal plus, well, equal whatever this is, plus 0.048, just like we did over here. Which is already, So that should be 4.3% churn, right? So we got churn down, we got all that stuff down. Now we got to go into our little hidden items. And Spotify sometimes likes to go and disclose, sometimes they don't. So podcasts, their monthly active Spotify artist stuff, so that's normally in their content and flywheel sections. Here we go, content. So they're now at, for Spotify artist tools, they're now at 690,000. Which actually, it's the first quarter that we can actually do a year over year comparison on. And they're up to about 90% of all streams. All right. I'll go into podcast. Here we go. Right down here. 21% of all MAUs will engage in podcasts. Up significantly from last quarter, about 2 bips. So we'll do implied listeners. Titles available reached 1.5 million. So we'll do penetration. And their original content. What's at 78? Trying to find the number here. to give number of podcast playlist. But I don't see a growth rate. I don't see a growth rate or a number there. If you guys see a number, let me know in the comments, let me know in the chat. Of course, the Joe Rogan Experience. So yeah, maybe I'll find that at an earnings note or something like that and fill it in later. But that's pretty much what we can go and gather that I have modeled out from our earnings release. So we'll go full page view over here for you guys. Now, of course, all of this stuff is captured in our chart data. So, as is tradition, we simply add a new tab. One can say these are, yep, I was smart. And then we'll just drag everything across. And it all populates very nicely. And what we can see immediately, once our charts update, they should update. That updated nicely. This one did not look like it updated correctly. Ad-supported gross margins are definitely below where I have them marked up to be. Ad-supported ARPU as well, but ad-supported subs are way above where I modeled them out to be. So one thing that we need to, and the opposite's occurring actually for premium ARPU. So looking back on this, I think our premium subs growth rate is probably dead on. Because you have to keep adding about 8 million subs a quarter, they'll get there. And total MAUs, this is all pretty much done based off of the ARPU for our ad supporters, where this number's kind of getting off a bit. Because if we look on the charts, of course, we'll see that total MAUs are way above where we were. Ooh. And kind of the same thing with total gross margin a little bit as well. We can probably up that and up our ad-supported subscribers, definitely way below. And then probably take down our ARPU estimates as well. So and also our gross margins. Gross margins appear to be way less than what we thought they were going to be. So instead of our base being 16%. It should actually be minus. Let's go and drop that down from 16 to 14%. Have it growing a little bit. The 14% still seems a little rich. Let's drop it down to 10. But bump up. But bump up our, we'll want our ARPU. Needs to, instead of year-over-year growth, that, I need to bump this up a little bit more too. Decrease ARPU probably a little bit more. Actually, no, I'm thinking about it. Yeah. Increase our subs, definitely. From 7% to... Let's actually reverse compute this. Let's have this be... this is tough because I kind of want to go and do what the current ARPUs, what the current subs are, because I missed by a country mile. And have this be 170, which it currently is right now. Times we'll keep that at 6%. But that gives us a lot more subs. Actually, let's just go and keep this at 0.06 and revert back. Just because we were so wrong that we need to go and edit that. So ARPU actually, let's knock that up to like 3% and really knock it down. Even, let's start off at negative 1% growth. Just kind of tag that along and see how that formulates out. Gross margins, kind of a decent drag now. Although, you can probably up our gross margin estimates for premium because they've been currently above where we are. Base, let's move base up to 27%. Have that flow through. That improves overall gross margins. And gross margins are about where they are right now. So let's actually look at, that actually increased our price target quite a bit. We were at 144 overall. Now we're at free cash flow multiple about 220. IRDCF about 460. 2463. Let's look at our discount multiples. Because the current price of spot is 262. So it's still, our IRDCF is a little bit under. Not shorted territory, but a little bit under what at least our revenue projections are, and we had to bump them up quite a bit, mind you. So we had to bump that up quite a bit. So let me just double check again. Does our ARPU look pretty decent? Yeah, it's a little bit decreasing, but looks pretty decent. It's actually about 50 cents below, so maybe we should bump that up too. Maybe bump this up instead of 2% growth, get about 5% growth right off the bat, and have that keep going. About inflation, let's make it inflation plus a little bit, about 2.5% growth. Gets us a little bit farther ahead, and actually makes it to be our IRR-DCF is about in line with where Spotify is right now, giving us a little bit of wiggle room if things change throughout the year. And yeah, our premium subs are now a little bit more on track. Premium ARPU is still a little bit below where it's at, but we increased that a bit, so we'll wait and see what happens. ARPU here looks a little bit better, so does total MAU growth. Premium ARPU does step down a bit in terms of growth rate. We're right in line now with ad-supported subs. Their ad-supported ARPU is a little high. Probably dunk that down a little bit more. I'm already going down. Let's go down 2%. Down about 42 cents for the full year. It's currently at about our full year is about double that, but a lot of that is podcast cost. So we'll see how that shakes up throughout the year. I could be right, I could be wrong. Get this about in line. Discount multiples. 5 times EV to sales is what we get to be about current price. Discount that back, and we do get our sell price to be just about where the stock is at. To go and justify where the stock is at. We'll go and clean up our euro mark. I don't actually know if Atom does currencies or not. I don't think they do. I don't know, do they? Nah. We'll just go to Koyfin. And our euro is at 1.1777, just a lot higher than what it is now, than what we last marked it at. Let's see how much that changes too. So that helps out in our favor. The kind of dollar weakness. So we're right about on our IRR-DCF, we have about 5% upside. Free cash flow multiple about kind of in the range. So overall, these two, if we were to average those out, we get approximately where the stock is, which is about what I think is about the right kind of metric-y area, because we did have to bump up a bunch of our estimates to get there. But overall, yeah, I mean, I could go and bump down our ad-supported ARPU a little bit more, I think, but I kind of want to leave that there because as much as the podcast cost hurt them now, it could bump them up in the future, especially with the Joe Rogan Experience coming actually onto Spotify to be able to listen to in September. So just in 2 months. So that'll go in effect third quarter a lot. So we could go and see that kind of shift up in both ARPU and GMs. But it's a little too early to tell, but I kind of want to... I don't know if I want to keep it super conservative or not. Because the first initial shock for gross margins was a doozy. But I am still fairly conservative on the growth rate of subscribers, because I had to bump this up after being at about 130-ish. And that's pretty much assuming that they only grow 5 million a quarter for ad-supported subs, and they've been averaging about 10 to 7 million additions a quarter, so that's kind of conservative. Kind of evens out where my ARPU's at a little bit. Bumped up premium sub ARPU a bit too. I'm still way under where that is, so I still think sub growth rate is about in line. So yeah, I think overall pretty decent quarter. You can see it's building a lot more in terms of what's happening in the later part of the year with, like I said, podcasting continuing to grow. Some of those costs being up front now, but later on they may prove to be justified, especially if buying the Joe Rogan Experience, that coming out in September. Some of the other kind of celebrity podcasts coming onto the platform as well. We could go and see some of those costs turn into a lot of big sub gains, which could be extremely interesting. I don't know, guys. I feel like that's pretty much all I got for you here. Thank you so much for watching. This has been one of the shorter ones, of course, because whenever we do earnings updates, they tend to be a little shorter. But we got a lot coming. We got a lot more earnings coming up next week. This is kind of the first one that we've done. We got Match Group coming up. We got Sirius XM coming up. A lot of very interesting ones. Spotify was definitely interesting. You guys saw I had to go and really change some of my estimates based on the quarter. So expect that to happen in the upcoming editions as well. Wow, even if my bullish case, the combined is still a little bit where it's at, but a little bit more to go in the IRR, DCF, and the free cash flow multiple. So, but yeah, guys. Once again, thank you so much for watching. As a reminder, I do try to stream every Monday and Wednesday finance content like you see here. Probably going to be streaming on Monday with earnings coming out on Friday and Saturday. I will be doing, of course, our investment Q&As, Zombies Q&A, where you guys can come ask me some stock questions, some investment questions while playing some zombies. So hopefully you guys can join in on that. It's been really fun these past couple weeks. And make sure to go and check out the YouTube links. YouTube link is, of course, in the info session here of the Twitch channel. If not, you can go and find all of our past streams on YouTube, so you can go and rewatch these as you want to, update your own models accordingly. And thank you so much for watching, and I guess I'll see you next time.